am delighted to welcome the senior management of Power Finance Corporation Limited, one of the leading public financial institution and a Schedule A Maharatna central public sector enterprise. I would like to first introduce Srimati Parminder Chopra. She is the Director of Finance and additional charge of CMD of the company. She has been with PFC since 2005 and has been serving as a Director of Finance and CFO since 2020, as well as a member of the Board of Directors. She has over 35 years of experience in power sector, including National Hydroelectric Power Corporation of India Limited, NHPC, and Power Grid Corporation of India, PGCIL. In her current role as CMD, she is responsible for driving the strategic initiatives at PFC, spearheading the organization's growth trajectory and further strengthening its position as a leading Maharatna PSU. Her extensive experience in project financing and infrastructure development, fund mobilization from domestic as well as international market, banking and treasury, asset liability management, stressed asset resolution, coupled with her visionary leadership, is expected to propel PFC to new heights of success. Next, I would like to introduce Shri Sandeep Kumar. He is a chartered accountant by profession and has been with PFC for more than 32 years and is currently holding the position of Executive Director of Finance. He has handled numerous financial functions and is instrumental in introducing several new products and policies in the company. And he also led the IT transformation in PFC. Lastly, we have Shri Sanjay Mehrotra. He is a CMA by profession, working as ED Finance in Power Finance Corporation and has versatile exposure in working across departments. He is currently heading in PFC Fund Management Unit, Lending Concurrence, Restructured Asset Units, Resource Mobilization, Public Issues, and 54EC. Everyone knows it, capital gain bonds. Welcome, everyone. Now, Madam, I would like to hand over the dais to you guys. Please take on the presentation and let us inform about the new issuance of public issue of NCD, which is coming up.
Sure. Thank you very much. And good afternoon, everyone. I think PFC is a well-known name. We are the Power Finance Corporation, and power related to each and every individual and every business of the country. So for the exclusive funding of the power sector on 16th July 1986, Power Finance Corporation was formed as a dedicated to the Indian power sector. We were formed as a government-owned company. In 1998, we have been registered as NBFC with Reserve Bank of India and also been declared as a Mini Ratna public sector undertaking. Maturing from there, in 2007, PFC has launched its IPO and has also been declared as a Navratna company. In 2010, as an NBFC registered with RBI, we have been categorized as an infrastructure finance company. In 2019, PFC has acquired Government of India stake in REC, which was 52.63%, and eventually REC becomes a subsidiary of Power Finance Corporation. In 2021, PFC has been declared as a Maharatna CPSE, which is the highest ever recognition for any of the public sector undertakings. And we were the first company in the financial space to be designated as Maharatna CPSEs. In order to expand our horizons beyond power sector, we have also been allowed, and our MOA has changed to fund the logistic and infrastructure sector. If I can share with you some of the financials of the PFC, in 2023, we have a consolidated net worth which has been crossed 1.23 crores. PFC is a leading financial institution funding for the entire power sector value chain, including backward and forward linkages for the power sector. We do fund the project in the form of project term loans. We do provide the short-term loan to the power sector companies for the fuel, for the power purchase and O&M. We are also partnering with Government of India initiatives and for improvisation on the power sector across the board. In the past and in the current also, we have partnered in Government of India scheme like RDSS, that is the Revamped Distribution Sector Scheme, which is currently launched by Government of India for reforms and turnaround of the distribution sector. IPDS, AP, RDPRP, UDAY, UMPPs, privatization of the transcos, and the latest also the LPS, Late Payment Surcharge Scheme, to provide the liquidity across the channel in the power sector. Through our subsidiary PFCCL, we do also provide the consultancy services for the value chain in the power sector. In the infrastructure sector, expanding our footprints, we are funding for the metros, considering funding for the airports, ports, roads. So whole gamut of infrastructure sector funding is open for us. As I already briefed you, that PFC is supporting power sector by way of playing a strategic role as implementation partner of the various schemes. PFC's net worth as on 31st of March 2023 is 68,202 crore. As on 31st March 2023, we have registered the highest ever PAT of more than 11,600 crore. In the last few years, our net NPA ratio has declined to the lowest to 1.07%. As on date, PFC has total loan assets worth 4.22 lakh crore. As I told you that we are funding the whole gamut of power sector and funding to the central, state, joint sector, as well as the private sector company. Our total assets, the total loan mix consists of 53% as the generation, of which 21% is the renewable, 7% is the transmission, 37% funding is towards the distribution sector. Out of the total loan assets, 83% constitutes funding for the state and central sector, and 17% funding is for the private sector. If you are able to see this bifurcation of the loan assets, we have funded across all the states in the country for the development of the power sector. If I can talk of this slide shows the improvement in the asset quality of the company. Gradually in FY17, from 12.5% as the gross NPA, we have come down to 3.91%. And the net NPA is one of the lowest in the last 6 years to 1.07%. We talk of the financial performance of the company. If we see the numbers as FY23, our total income, registered income on standalone basis was 39,600, where the profit registered is 11,605. Our disbursement stood at 85,700 crore during the previous financial year. For funding of the power sector, being an NBFC, we raised the funds from the market. As on date, the total outstanding, as on 31st of March 2023, our total outstanding borrowing is 3.62 lakh crores, of which 60% constitutes funding from the domestic on the private placement basis. Around 20% is the loan from banks and FIs, and approximately 20% is from foreign currency borrowing. PFC has been designated as the agency to collect 54 EC capital gain bonds with effect from 2017. As you all are aware that climate change is a big concern for all the across the world, and power sector is going through strategic shift from the fossil fuel based to non-fossil fuel based generation. So PFC in the process is also partnering with Government of India to take up these initiatives. So PFC till now has funded one of the largest lender for the renewable space, that is wind and solar. And we are looking forward for funding of the green mobility, green infrastructure. PFC has already funded few projects towards the waste to energy. Some of the initiatives which have been taken includes RDSS, because that is the basic reform which can be a turnaround for the power sector once the health of the DISCOMs have been improved. PFC is also intending to work as a focal institution for net zero along with the infrastructure funding. It has been estimated for the net zero target 2070, 10 to 20 trillion US dollar funding is expected, out of which 80% funding is required alone in power sector. PFC is primarily focal for funding of the power sector, is expected to play a crucial role in achieving the net zero target and achieving the Panchamrit target of the Honorable Prime Minister, which include 500 gigawatt of the renewable installed capacity by 2030, and also 50% of the total installed capacity through non-fossil fuel. So PFC is working towards that. Let me talk of the public issue. Today we have launched the public issue. We have announced the public issue for issue of secured, rated, listed, redeemable, non-convertible debentures. Power Finance Corporation is a Government of India undertaking. We have proposed the issue with a base size of 500 crore with the option to retain subscription till for another 4,500 crore. The minimum subscription expected is 10,000 and thereafter in multiple of 1,000 crore. The three tenors, we have launched the issue with three tenors. It's a 3-year, 10-year and 15-year options. Issue opening date is 21st July 2023 and the issue closing date is 28 July 2023 with an option to close the issue earlier. These bonds have been rated by all the three major agencies in the country, that is CRISIL, ICRA and CARE, and the highest safety rating has been given to these bonds. Allocation percentage is proposed for the 10% for the institutional and non-institutional investors each, and 40% each for the HNIs and the retail investors. And as per the SEBI guidelines, these are being allotted compulsorily in the demat fund. About the coupon rate for these bonds, for the category 3 and 4, that is the HNI and the retail, it comes with a 3-year coupon of 7.5%, whereas the coupon for 10 years is 7.53. The highest coupon is there for 15 years, 7.55%, with an allocation of 40% each for both the categories. For category 1 and 2, the coupons are a bit lower, that is 7.45, 7.47 and 7.50 for 3, 10 and 15 year, and the proposed allocation is 10% each. And these are the details of the lead manager, where we have JM Financials, AK Capital, Nuvama, SMC, and the Trust Investments.
Jay Prakash Nair, and from Cochin, and there are other queries also, ma'am, from the similar queries. Are we not getting tax-free bonds from PFC? So, but this is, I think you can only answer.
Tax-free bond allocation is being done by Government of India, specifically Ministry of Finance, generally in the budget, during the budget period. So as and when there is an announcement from the government for the tax-free bonds, then definitely PFC can pitch in for issuances.
Yes. Thank you, ma'am, for the clarification. So, Mr. Nair, Mr. Painter, these bonds are not tax-free. The interest income received on these bonds is taxable and taxable as per the tax slab you fall into. So it's known as marginal rate of taxation. These instruments are taxable instruments. Sachin Ghelawat from Bangalore. What is the use of this money which will be raised? So end use utilization for these funds. Yes. Ma'am, move to you.
Yeah, the funds will be utilized for the general corporate purposes of PFC, which includes funding for the power and the infrastructure sector and the other requirements of the company. But in any case, in line with the SEBI guidelines, for the debt servicing portion, it will be restricted to 25%.
Again, a similar question, but Mr. Jamdas from Jamnagar, is the forthcoming NCD issue by PFC is classified as infrastructure NCD?
See, no, there is no classification as infrastructure NCDs. These are the, I think, normal NCDs, which are secured, tradable, and redeemable.
Thank you, ma'am. Mr. Unni Krishnan from Bangalore, he's saying that I am a senior citizen. Most of the banks do provide additional interest for senior citizens. So is there any option or availability for a higher interest for senior citizens?
See, the coupon for the retail category has been fixed in keeping in view the interest rates they are getting from other saving schemes. So I think that is why it is one of the highest for 15 years at 7.55% annually.
That is, Mr. Unikrishnan, there is no additional incentive for being a senior citizen. I can understand your plight, but yes, this is the best rate which is available as of now, considering PFC as the highest rated by all the rating agencies, CRISIL, ICRA, CARE. You have AAA stable rating. This is the best rate which you can invest into, and for a longer duration, for 15 years, you can invest. So you can be rest assured that the money is safe and you get regular interest payment. Ma'am, there's an interesting question. Considering the issuance of foreign currency, short-term and long-term issuances, do you think there can be a significant amount of currency risk due to fall in the rupee value?
See, we have approximately 20% of our outstanding borrowing in the foreign currency, but I'm happy to share with you that the risk arising out of these bonds, these borrowing has been mitigated to a large extent. And if we talk of the US dollar borrowing, then borrowing maturing in next 5 years have been fully hedged. So PFC book doesn't carry in the immediate near future any risk of currency depreciation.
Mr. Singh from Chandigarh has asked, what is your loan growth guidance for FY24?
I can share with you that during FY23, PFC loan book has grown by 13%. And looking at the prospects of funding for the power sector and the opportunities available for funding, as we are expecting that there will be a 31 lakh crore requirement of funds by 2030 to meet the India power sector requirement. And 2070 net zero, if we talk, we are talking of 10 to 20 trillion of US dollar. So PFC will have ample opportunities for future growth.
Thank you, ma'am, for clarification. Mr. Mahadik from Mumbai, he is asking, how much stake the government holds in PFC?
It is 55.9% stake. Government of India is holding in PFC.
Again, for the same question by Mr. Bhatt, can we expect PFC to issue tax-free bonds anytime soon?
That is not in the hands of PFC.
Unfortunately, Mr. Bhatt, this is not available. There's no visibility at this moment. If there is any bond, please be log in on IndiaBonds platform on a regular update. If there is any issuances of tax-free bonds coming in the market, we'll be the first ones to intimate you. Mr. Ahuja from Ludhiana is asking, now that we have started financing infrastructure also, please throw some light on the risk management regarding infrastructure loans.
Infrastructure funding is a new area, I agree, for PFC. What I can share with you that earlier also we have been appraising infrastructure, number of infrastructure projects like irrigation and even some ports. But there at that point of time, since we were not mandated to fund for the infrastructure sector, so we were restricting our funding only for the power component involved in the project. So earlier also we were appraising and taking clue from those type of projects. We have started funding for the infrastructure sector, where initially appraisal has been done, funding for the electric component has been made. For the balance portion, we have started funding, like it was done in case of metros, in case of irrigation. Slowly, we are building up the expertise and strengthening our appraisal system. That is why we are going at a bit slow pace for funding of the infrastructure sector, looking at the future, expecting future expertise to be developed in the area.
Mr. Ahuja, I hope you have got your answer. Now I move to the next question. Are we going to see some PAT growth trajectory in the future, or the same PAT growth trajectory in the future?
As I have shared with you that there are a lot of opportunities for funding in the power sector. Looking at the power sector, there is an energy transition which is happening from fossil fuel to non-fossil fuel. And looking at that, there is a growing and increasing demand of power in the country. We are the largest populated country with a very high number of young population. And the other thing is that our consumption in India is just 1/3 of the world average. So there is a lot of scope for improvement and expanding the capacity in the power sector. So all those opportunities, being an expert in the sector, we are expecting to have those all types of opportunities available to PFC for funding.
Thank you, ma'am, for the clarification. I move to the next query. How much do you hold in REC Limited? And do you have any plans to monetize it in near future?
In 2019, we have acquired 52.6% stake, Government of India holding in REC. So that we have acquired, and there are no such plans as of now for monetization of the stake.
Thank you, ma'am. There's one question regarding the green financing. So how is PFC doing green financing? Can you please throw some light on it?
PFC is one of the largest lender in the renewable space. So PFC has funded and provided support to 16 gigabyte of the renewable capacity in the country. So we are funding these opportunities, and in line with the Honorable Prime Minister's vision of funding for installed capacity of 500 gigawatt from the non-fossil fuel sources, and having a mix of 50% of the total installed capacity from the renewable sources. Going forward also, PFC will be playing its crucial role. So we will be funding, and for funding for the same, we have been raising from the domestic market as the normal funds, and also some specific green funds from the domestic international market. So that is there.
Thank you, ma'am. I am getting a live question. There is a lot of buzz around smart prepaid meters. How is PFC participating in new smart prepaid meters opportunity? This is new.
Smart installation of smart prepaid meter. The government is taking initiative as the part of the RDSS scheme for installation of the prepaid smart meters. One, PFC is having an opportunity to fund counterpart funding under the RDSS scheme. Second, since we are committed to provide backward and forward linkages for the power sector, we are also looking at the opportunities to fund the smart meter equipment manufacturing companies going ahead. Our subsidiary PFCCL has been implementing the smart meter installation projects, and they have successfully implemented one such projects in Dharamshala and Shimla in Himachal Pradesh.
I have a query regarding the NPA. Your consolidated net NPA is improving. Do you think it is sustainable?
We have our gross NPA have reduced to the extent of around 50% from its peak. And we have one of the lowest net NPAs at 1.07%. And that is with a sufficient provisioning of approximately 72%. I would like to share that during the past one to 2 years, no major NPAs have been added in the PFC books. So that gives us a comfort that going forward, we will be able to maintain.
Mr. Kadam has asked a question. There has been a decrease in the cash and cash equivalents for the year ended 31st March 2023. How is PFC planning to have enough liquidity to pay its dues?
See, for any NBFC, I would like to address this question like that. For any NBFC, cash works as the raw material. So, and on the other hand, we would like to maintain a balance between the liquidity and the carrying cost. So we at any point of time have 10,000 crores of line of credits with us sanctioned from various banks in the country. That is the cushion we are maintaining at any point of time. And apart from that, as per the Reserve Bank of India guidelines, we are maintaining HQLA in terms of the applicable limits. So there is not any issue for maintaining the liquidity. RBI is regularly asking us to provide the ALM, which is on the monthly basis. On that also, we are fully in compliance. So there is no such liquidity issue in the company.